Good morning, everyone. Maganda Numaga to everyone joining the webinar today in the Philippines, and welcome to this webinar on transforming AML CTF regulatory compliance in the Philippines in association with Solytics partners. My name is Shirish, Pathak. I head Fintelekt, and as many of you know, the Philippines is really one of my favorite places, which is evident from the fact that I visited Manila 6 times this year in 2024 itself. Therefore, it is my pleasure to be your host today and moderate this virtual panel discussion for the Philippines. I'm joined today by five industry experts as panelists. Milagrose Maguigad, head of the AML department, Land Bank of the Philippines. Welcome, Milagrose.
Yes, thank you, Shirish. Good morning.
Morning. Shalini Venkateswaran, partner and head of AML and FCC at Solytics Partners. Welcome, Shalini.
Hi all, good morning.
Attorney Ronel Buenaventura, AML head at G-Xchange, that is GCash. Welcome, Ronel.
Hello, good morning.
Good morning. Ryan Bautista, AML compliance head at Union Digital Bank. Good morning and welcome, Ryan.
Hello, good morning, everyone.
And we also have Attorney Darius Ian Manlegate, Director of the AML Compliance Office at Newport World Resorts. Good morning and welcome, Darius.
Good morning, everyone.
So, panelists, again, warm welcome to each and every one of you. Thank you so much for taking the time to be on this panel today to share your thoughts and expertise with our audience. Now, as we all know, the regulatory landscape in the Philippines continues to evolve, and as the country prepares to exit the FATF grey list, covered persons will continue to face increasing expectations to comply with AML CTF standards and guidelines. But as we all know very well, AML CTF is easier said than done, and it comes with its share of challenges. So today we will discuss a number of topics within AML CTF regulatory compliance with our esteemed panelists. So we will have an interactive discussion for around 45 minutes, followed by 10 minutes for audience questions. Participants, as we go along, if you have any questions, please post them in the Q&A window, and I will try to take as many as possible at the end of our discussion within the allocated time. We also have 3 audience polls that we will run during the webinar, and there will be a lucky draw winner selected for each poll question who will receive a surprise gift courtesy of our webinar sponsor, Solytics Partners. So please participate actively in the polling questions. With that said, let's start the panel discussion now. So my first question to the panel is, how have the changing regulatory expectations over the last few years impacted AML, CTF, as well as PF, that is proliferation financing, priorities over, for covered persons? And speaking about the present, what areas, within compliance do you feel regulators are focusing on most in their oversight currently? So maybe, Milagrose, let me start with you, if I may pose a question to you first.
Yeah, good morning, Shirish, and all the participants. Over the years, regulatory frameworks have become more complex with the introduction of various standards, such as those of the Financial Action Task Force. So compliance priorities have also shifted towards a more robust risk assessment processes, requiring covered persons to adopt a more nuanced understanding of their clients and transactions. There has been a greater emphasis on enhanced due diligence for high-risk clients and jurisdictions, requiring covered persons to really invest in better data analytics and monitoring tools. As we all have noted, no, I guess my colleagues here would agree with me that as compliance requirements become more complex, covered persons are expected also to adapt more sophisticated strategies to manage our risk effectively. So the regulators, as I have noted, no, During the legislative inquiries, there has been emerging threats. They have been focused on the emerging threats related to digital assets, specifically on how this can be exploited for money laundering and terrorism financing. Likewise, there's also a strong push for transparency in beneficial ownership, not just like as we have witnessed during the legislative inquiry, to prevent the misuse of corporate structures for illicit activities. Regulators are now scrutinizing on how we covered persons identify and verify beneficial owners. Likewise, there's also tightening around cross-border transactions, particularly in jurisdictions known with the lax controls, requiring covered persons to enhance monitoring on international transactions. I'm sorry, but I can't really
No,
talk.
I know that you've got a
Yeah,
bad throat today, so that's fine. This is good. I will circle
yeah,
back to you again after some time. Thanks, Milagrose,
okay.
for your comments.
Thank you.
Teres, may I request you for your comments to this question? The rest? Okay, yeah.
Yeah, Shirish. And for to be fair to the Philippine government has always been serious in its official stand against money laundering and terrorist financing. It's been very dynamic. What casino sector has just been recently covered, at least 2017. We have been covered and designated as one of the covered persons in the Philippines. And since that time, less than 10 years, there has been several guidelines, issuances issued by our government regulators for the purpose of just tweaking in measures, putting in effective AML measures in the casino industry to be able to stand against the fight against money laundering. At present, the focus now is more on casino junkets, considering that this is one of the issues, technical deficiencies noted by the FATF and the APG in 2021, which actually was one of now the which is now thankfully one of the key reforms now that has been addressed by the Philippines through its government regulators on casino junkets. So as we'll be discussing later, there has been a lot of changes that has been implemented by our regulators, which the casino industry has been very compliant and obedient and cooperative with all the, with government regulators on this one. So it's dynamic, it's evolving, and it's also a good exercise for everyone to be aware, to be made aware of a culture of compliance for the industry as well.
Right. Thanks, Raj. Ryan, may I get your comments on this question?
Yeah, thank you, Shirish. For us, for the digital banks, usually the shift of the regulators when it comes to addressing the complexity of the regulations right now is on addressing on particularly on the consumer assistance program of the Bangko Sentral ng Pilipinas, because there has been increase in the online scamming. That's why on the raw post when it comes to AML CFT program, that includes of the activities of the digital bank. Actually, there is a program of the AMLC, or the Anti-Money Laundering Council. I'm not sure with the title, but there is this public-private partnership on the information sharing protocol, wherein it will also increase the in addressing the rampant cyber criminals nowadays. Yeah.
Right. Thanks, Ryan. Okay, Ronel, coming to you, uh, your position is a bit unique because I think you've also been a regulator earlier. You've worked with the AMLC, and now you're on the other side of the table. So, what is your view on this particular question?
Yeah. So yeah, I've been with the BSP and the AMLC before, and just recently uh, joined GXI. And definitely, what we see here is covered persons. We are cognizant that covered persons remain committed in faithful compliance with the AML CTF PF responsibilities. However, uh, with respect to what priority areas are given more attention, it varied depending on the direction of the regulators and the government. So, for example, for casinos, it was mentioned a while ago, for junket operations, of course, there are the government, the regulators have been looking at more attentively than before. Uh, but overall, we can see that there are certain areas really that are the focus of implementation. For example, the implementation of targeted financial sanctions, the TFS. We also have uh, focus on the NFBPs, or the designated non-financial businesses and professions. There's also a pressure on reporting requirements, which would translate essentially to financial intelligence, among others. But if we analyze this, at the end of the day, the common theme is these are action items that the Philippines must comply or have complied already in relation to the Financial Action Task Force gray listing. So all in all, the main driver, I think, here is really the international community as well, and of course, are the regulators' steadfast commitment to comply with these standards, and which translates to the private sector's commitment as well to comply with these requirements.
Right. Thanks, Ronel. All right. Before I move to Shalini, let's take a quick poll. Can we have the first poll online, please? All right. So, participants, if you can also, give in your thoughts, what do you believe are the key priorities for your AML compliance program for the coming year for 2025? We have 4 options mentioned over there. Let's give it about 30 seconds. If you participate in this poll and the other polls, you stand a chance to win a surprise gift in the lucky draw. All right, so we are almost equally tied between developing in-house capabilities and a hybrid approach, but evaluating and implementing compelling solutions available in the market seems to be taking a lead. Maybe just give it 5 seconds more. All right. Thanks for answering the poll. Let me move on, to a question for Shalini now. Shalini, welcome again. So Shalini, how do you see something like EDD or enhanced due diligence evolving? Particularly in response to the evolving regulations, some of the emerging risks. I mean, you deal with customers in many countries, so. Obviously, here we have the audience for the Philippines, but do you see any differences amongst countries? And specifically for the Philippines, what do you see in terms of EDD?
So throughout the globe, right, the regulatory guidelines says always to have a risk-based approach to the policy of due diligence. And the Philippines guidelines, both from BSA and the regulatory bodies do say so as well. The risk-based approach to your customer due diligence program basically means focusing on enhanced due diligence measures for your higher riskier clients as compared to your normal due diligence approach for your lower riskier clients. So now with the enhanced due diligence approach, specifically for a client where there is a obscure, like where there is a huge source of wealth, or if there is going to be a presence or an involvement of a high risk jurisdiction, or involvement of a complex product or a complex portfolio, enhanced due diligence is mandatory. When you say enhanced due diligence, you would have to identify the complete ownership structure about the UBO information to ensure that there is no level of sanctioned or shell companies being involved or being onboarded by the covered person, right? So the enhanced due diligence becomes very critical, and it has to be dynamic as well. Also, even in the regulatory guidelines, it's also encouraged to do a complete screening of the particular customer the PEP details, including the family member, have to be screened to ensure that there are no stones left unturned, right? And then even searches about the entity or the organization in terms of the public media searches to identify if they have any indirect exposure to any of the riskier industries maybe, or any of the riskier counterparties. Uh, that kind of enhanced due diligence is what is going to be where the organizations are becoming more and more evolved in applying these kind of measures as a part of their core EDD program. Right?
Thanks, Shalini. Moving the same question to Ryan, on enhanced due diligence. I mean, do you agree with what Shalini says, and or do you have any other thoughts? What's happening in your institution?
Yeah. Uh, when it comes to enhance due diligence, well, technically, it boils down to two aspects. Number one, uh, the system that is being used, or the software, whatever it's called, or the tool to be used, should be fit within the business or the industry that is being used. And second is on the compliance practitioner or the people using the system should also fit in using it and manipulating the system as well, which boils down to the its expertise. Because no matter how good the system is, if the ones running the system is not capable of using the system, then definitely it will still fail. So definitely there should be any collaboration between the provider when it comes also to how the manipulations of the system, its features, and combating its the objective. And second, also on the part of the employee who uses the system should also fit and aware of any regulations that is impacted within its business together with the actually there's also what we call this the continuing education program also in partnership with the regulators. So that boils down to two aspects, both the system and the people handling the system actually.
Right. Ronel, what would you say is your take on EDD? Again, from both sides of the table.
Yeah. Well, I agree with Ryan on what he mentioned a while ago. But in addition to that, I think we have a comprehensive framework already for enhanced due diligence. It's more on how do we fit it or customize it depending on the sector or industry. Because we have a general guidelines, but definitely our EDD processes for, say, for gaming and casinos may be somewhat a nuance compared with the fintech industry or for a traditional banking industry. So maybe it's more on how we are able to fully customize it or focus or give a particular focus or attention to the nuances between the sector specific risk that we want to address when we are conducting enhanced due diligence.
Right. Thanks, Ronald. Whereas, coming to the casino sector again, EDD would possibly
Yes,
be
Shirish,
seen as a
as Ronald here mentioned about being customizing due diligence measures, depending on the industry and depending on the risks. Our regulator issued about last year a particular regulation on conducting enhanced due diligence for casino junkets, for example. So we need to fully enhance our due diligence measures now before the casinos can enter into an agreement with these junket operators. These operators have to pass some fit and propriety assessment tests that has relations to financial capacity, integrity, and honesty, and even educational background of these operators and key persons comprising these operators. So basically, we have layers of due diligence, enhanced due diligence measures, especially those is expected to bring in large amount of money, for example, in the business. So we are okay. The casinos are generally okay complying with this because we are actually able to know well our customers. We were able to really dig into who they are before embarking into a business opportunity with us.
Right. Milagrose, your views on EDD?
Yes, Shirish, enhanced due diligence is evolving to address stricter anti-money laundering and counterterrorism financing regulations. And as the government aligns with international standards, there is a heightened focus on high-risk sectors like the DNFBPs, as mentioned earlier, and the gaming industry, requiring more rigorous monitoring and checks. Particularly for the banking industry, it's really hard for us not to monitor DNFBP transactions. Likewise, the rise of digital finance and cryptocurrencies has prompted the establishment of specific guidelines for virtual asset service providers, enhancing compliance measures, and there's been a greater emphasis on beneficial ownership transparency, as I mentioned earlier, which calls for improved verification process. So basically, EDD practices are becoming more tailored and responsive to emerging risk, ensuring that financial institutions can effectively combat money laundering and terrorism financing.
Right. Thanks, Milagrose. Okay, let's move to the topic of transaction monitoring now, and finally where the rubber hits the road is if the institution can actually submit a good quality suspicious transaction report to the regulator. So a lot of things which go into that. Let me start with Shalini, because again, Shalini, you would have seen this in various parts of the world. So when it comes to making transaction monitoring systems more impactful, right? What do you think goes into that? And are there any examples that you can share from of having worked in the industry that something has worked really effectively when it comes to identifying STRs?
Sure. The primary pillar of a robust transaction monitoring program is your rules, which are getting configured by other.
Shalini, sorry to interrupt you.
Sorry.
I think we're getting a lot of static. Do you want to try without the headphones, maybe?
Sure, sure. Just give.
Sure.
Is it better now?
Yes.
Okay. Yeah. Backbone, as I was starting to say about the effective transaction monitoring program, the backbone of your strong transaction monitoring program is going to be your rules, which are there as a part of your transaction monitoring system. These rules have to be configured by adopting all the or evaluating all the RFIs published by the regulators, by the BSA, where you would have to map it off to the scenarios or the specific rules that you are offering against. And so the typology coverage, typology coverage assessment first has to be done to ensure that the scenarios that are configured as a part of your transaction monitoring system covers all your red flags pertaining to the kind of product and the services and the industries that you're dealing with, right? So this forms as the fundamental element of your transaction monitoring system. Now, over and above, what we have seen is an effective segmentation approach in while implementing these rules into the system must also be present, because if you do not have a targeted approach towards configuring these rules, you would not be able to effectively identify SARS pertaining to SaaS pertaining to that particular customer group, because your customer comes in different segment, your entities behave differently as compared to that of the individuals. Even within the individuals, your high net worth individuals behave differently. Now, this segmentation differs from sectors to sector. For a DNFP, the segmentation would differ. For a bank, the segmentation would differ. So each of the institutions should adopt segmentation which caters to their kind of customers and their kind of product and services that you're offering. So the transaction monitoring rules and segmentation should go hand in hand. Over and above all of this, right, your thresholds, which are your backbone of your scenarios, should be periodically reviewed and tuned and fine tuned to ensure that the rules which are or the alerts which are coming out of the TM sense make meaningful relevance in terms of filing a SAR, right? And it has to be reevaluated on a continuous basis. There might be such circumstances because of the nature of product that you're offering or the kind of customers that you have in your portfolio, that particular entity, that particular red flag might not be really relevant for you. So that kind of analysis that you would be able to do it on a continuous basis by reviewing the kind of alerts and the kind of SARs which are getting filed based on your alerts which is generated from your TM system. So that optimization angle to ensure you have an effective and an efficient TM system has to be on a continuous basis, right? The third or the other new aspect which we see very evolving in the much mature markets is what adopting a machine learning algorithm or a machine learning approach to enhance your effectiveness of your TM rule. So it's not essentially to replace your rule based system, but it is also to look at to capture an unknown pattern, maybe to enhance your efficiency. It's going to work like a supplementary to your rule system where you can generate alerts based on a new pattern which is identified. Let's say you, as a part of your investigation, you do find a series of shell companies, then you use your analytics around it to be able to derive a new pattern and incorporate it back to your TM system so that it start generating alerts on a periodic basis on these kind of new rules that you unearth as a part of your ongoing investigation process. So we have seen the trends getting shifted from, I wouldn't say getting replaced, but it is getting adapting more analytical based approach to effective monitoring.
Thanks, Shalini. Milagrose, Shalini mentioned these couple of things, cluster-based approach, segment-based approach, and also, on the other side, detecting new patterns, with machine learning and AI and, these new tools. Now, Land Bank is, one of the large banks in the Philippines, and I'm sure you have all types of customers, right? So what is your opinion on, what goes into really impactful transaction monitoring? And when it comes to STRs, how do you not miss out the important ones?
Yeah. Okay. For Land Bank, no key advancement on our AML CTF on transaction monitoring and identifying suspicious activities include the use of advanced analytics and machine learning to detect anomalies in transaction data. Because these technologies can actually analyze large volume of transaction data given the number of transactions that we have, to identify patterns and anomalies that might indicate illicit behavior. Likewise, real-time monitoring system that flags suspicious transactions as they occur, because this timely intervention can actually prevent money laundering activities before they escalate. And in fact, these improvements has been in response to the requirements of BSP Circular 1140. So I guess collaboration also of collaboration and information sharing initiative of the Anti-Money Laundering Councils, which also enables covered person to share insights about emerging threats and suspicious patterns, improving our overall detection efforts. Well, we have internally developed a system wherein we find it really effective, reducing our alerts, false positive alerts from 10,000 to basically 90,000 on a monthly basis to 5,000 alerts in a day. Yeah.
Right. That's fantastic. So, moving to the digital payment space, Ronel and Ryan, what are your opinions? So, whoever would like to go first.
Yeah, I think I can go first. So, Shalini laid down the foundation on what really is a good transaction monitor. I think we can cannot just depart from that. And if you're asking what would be the improvement that would be most impactful, it's actually going back to the basics and really strengthening these fundamentals. Because with this, we can keep up with the evolving patterns and the different transaction types. Of course, we can add on top of that improvements like analytics to help us more with the patterns. But at the end of the day, it goes back with this alert parameters, scenario threshold tuning, and for me, one key effective strategy really is to conduct a periodic STR analysis, because that would allow us to identify what could be the recurring patterns, emerging typologies, or shifts in the nature of the suspicious activities. Uh, because as we prepare STR, it's always focused on a particular transaction. We might be missing on a bigger picture, but if we do frequent STR analysis, then we can see the bigger picture, and then we can use these insights to further fine tune the alert parameters or fine tune our scenario or overhaul the scenario thresholds if need be.
Right. Ryan, what's your view?
Yeah, I agree with Ronel. No? But and also in addition to that, for us, for the digital bank as well, which is somehow related also with the different e-wallet companies. No? What we currently do, actually, we have this project ongoing right now that we are trying to have this coding. We try to manage by using codes because we have various merchant partners. So definitely from the beginning, usually there are so many false alerts because as a digital bank, the app that being used is sometimes it is observed because sometimes you can use the wallet every now and then. So sometimes when it is being captured by the alert management system, it sounds to be there are so many transactions within a day. So what we can do, what we need is we are trying to put a code so from depending on the nature of the transactions, depending on the different types of products and services that is being used. So we are trying to fine tune as well and align with our transaction monitoring rules. So we have this lack of rules in order for us to lessen as well the alerts and also to fine tune. We have this quarterly review on the effectiveness of our parameters in order for us to address what's the latest threats and trends, even with different partners as well. Since we also receive different kinds of complaints, so we try to address and align with focus on addressing those cybercrime activities.
Right. And do you get any feedback, back from the AMLC or the BSP every year on what are the trends they are seeing, and you sort of get that back into your system?
So far, when we have a communication with the BSP. Actually, right now we have ongoing BSP examination, and as part of the scoping and discussion with them, we run through and walk through with them on the possibilities and the salient features of the system and the projects that is being ongoing right now.
Right. Okay, so Darius, coming to you, for the casino sector side, I mean, how does transaction monitoring work there? Does it work differently from what it works in the banking and financial sector? How do you make sure it is done effectively, and how do you track patterns in your industry?
Yes, Shirish. For the casino industry, I think the casino industry has one of the highest threshold amounts for covered transactions. It's very clear also that the regulations provide that it should be single transaction, no aggregation. It should also be a cash transaction, casino cash transaction. So basically, that is streamlined to that only. The threshold amount of 5 million Philippine peso, and then cash transaction and single transaction for on a daily basis. So we have already some automated system in place that provides for that. For the transaction monitoring, insofar as a suspicious transaction, again that's a challenge again because we really have check on a universe of data on a daily basis. Our analysts have to be checking on each of transaction to fit in on a particular ground for suspicious transaction reporting. But may I point that recently there is a regulation from PAGCOR that allowed the recording of financial transactions between junket operators and their players. I think this is another offshoot from the FAT-FAPG requirement reforms. So now, on a daily basis, the junket operators submit to the casinos a reporting of all the financial transactions between their respective junket players. With that, we are able to analyze the data. We are able to study the trends, and we are even able to dig from that report of the junket operators covered transactions in itself or suspicious transaction in itself, in addition to what we do in our usual transaction monitoring for covered transaction and suspicious transaction report. So basically, that reporting from the junket operators submitted on a daily basis to the casinos are actually very helpful in establishing trends, in studying the data, and even filing for covered transaction and suspicious transaction before our government regulators.
Right. So, we just have a question from the audience since we're on the topic of junkets. This is a question by Aaron, who asks, in the case of junkets, does the added cost of complying with government regulation make you think of discontinuing the sector entirely? What is your view on that?
I don't think I'm stopping it entirely because
The rest, I think we've lost you there.
yeah, I think the business is still good. So we are ready to comply with whatever the regulations provide. So basically, I think this enhanced due diligence, for example, for junket operators are a bit costly, and because we have to engage third-party providers to scout out financial capacity of these operators. But I think the casinos are able to comply with that. So I don't think uh, compliance and business work hand in hand at this point. Of the regulation.
All right. Okay, let's, before we continue the discussion, let's run the next poll question. Can we have the next poll up, please? So this one is on technology adoption, and our next question to the panel also is going to be on a similar topic. So what is the current state of technology adoption and automation with respect to AML CFT systems and compliance in your organization? So it looks like the trend is towards most people saying it's partially automated. About 10 to 15% say it's fully automated, but about 5% say that it's entirely manual. Okay, just give it a few seconds more. Okay, so I think we can see the results, and just a quick question on this. So, Ronel, if you wear your earlier hat, I mean, is this sort of representative of what you were seeing in the entire industry in terms of everyone having the right technology in place?
Well, I think it is, but most industries right now are in the process of trying to automate a lot of their processes, which is which is really the direction now, which is digital transformation as well. So what we see here, based on the results, is uh, the industries are really moving. The private sector is really moving forward digitalization or transformation, automation. Although we see here partially automated, I think this is not the end state of most institutions, more on
Yes.
a work in progress. Yeah.
Yes, exactly. All right, so let's move to the next question on the panel discussion. So, talking about technology and automation, these days compliance officers, compliance teams, I think have to be as good in technology as they are in compliance, because everything is moving to technology. And whether you're running technology that is built in-house, or you're leveraging an external vendor, you need to know enough, so that whether it's working for you or not. So Milagrose, coming back to you again, in what ways do you think that automation or technology is actually enhancing the efficiency of compliance processes without compromising the quality, right? Because yes, you
Yeah.
can put in technology to give you thousands of alerts, but how do you make sure they're the right ones for you?
Yeah, automation and technology can greatly enhance the efficiency of compliance processes without compromising quality. First, streamlined data collection and management reduces the manual errors and ensure an accurate and up-to-date client information, as has been discussed by my colleagues earlier. Real-time transaction monitoring, which is the focus actually of BSP 1143, enables also the immediate detection of suspicious activities. Well, of course, this is not so easy for us, no, particularly the banking industry, given the vast amount of transactions we deal on a day-to-day basis. But automated reporting tools facilitate the consistent generation of compliance reports. Likewise, the risk-based assessment tools which prioritize compliance efforts by identifying high-risk indicators. So basically, technology and automation really helps us in the efficient case management also, which help us track suspicious transaction activity, ensuring that compliance team focus on critical issues. As you all know, transactions of the banks are really that voluminous, no? And considering that technology enhances training programs, no, we have to keep our staff informed about the latest regulations. And for our part, no, for land bank, we utilize technology also in the conduct of our training to ensure that our staff are informed about our what they call this, the latest regulations. So in order for us to maintain high compliance standards while effectively managing our resources, we really need to move for automation. Well, of course, automation is very costly, but that's really what we need. Thank you.
Right, right. Okay, so Ryan, you're a completely digital outfit. So, for you, I think technology is 100%, that you'll be leveraging. What's your view on, how technology can actually enhance efficiency,
Yeah.
and how is it doing it for you?
Yeah, I believe at this point in time, not just the digital banks, but generally all financial institutions at that point in time is gearing towards investing into technology and of course to people. Uh, and I think automation, when it comes to efficiency and effectiveness, of course, in several ways, the standardization. And so far at the moment, I believe the current trend right now is the use of data analytics when it comes to addressing the
Yes.
compliance issues on transaction monitoring and of course red flags. And right now, that's the focus at the moment. Actually, that's part of the project of the bank. We are gearing towards the use of alternative data solutions when it comes to compliance um, regulations. No? So in in relation to addressing the voluminous number of transactions. So of course there is a bit part of involvement of humans in when it comes to evaluations and assessments of the results, because at the end of the day it's still the manpower who runs the system. So I believe like my colleagues mentioned a while ago, the industries are now investing into the technologies at the moment.
Sure. Yeah, absolutely. Darius, what's your view from the casino sector again, from that point of view?
Yeah, I think automation is a very is a big help to in the processing of data and transactions, particularly that we are dealing a lot of large transactions, even those transactions that has to be monitored on a daily basis. But as mentioned, I think by Ryan here, there should be some human intervention when it comes to automation, because that would be effectively save time. That would effectively get the ultimate result for that particular for that automation project. Our system here is internally developed, and we work hand in hand and in close coordination with our IT department in providing for the AML framework, so that when they do it, they are already guided with the parameters. Which should be implemented and rolled out in the business units already. So there should be a good coordination with your provider on the parameters that should be followed in providing an automated system.
Right. Ronel, moving the question to you, maybe in a different way, what would happen if you don't use technology?
Oh, well, you will be left out, Shirish. I think if the competition is going that direction and you are resisting that direction, definitely left out. Well, just to add, I think based on the discussion, so I totally agree with my colleagues here, but and to just to sum up the critical areas, so as not to compromise quality, I think we really need to identify what processes can be automated and up to what extent, taking into consideration the nature, industry, complexity of the operations. And second, we also have to have a proper and constant training and capacity building on the personnel handling the technology. And finally, of course, we need to have proper or periodic testing or audit on the technology itself, because we know, of course, it's not it has potentials, but it has technical limitations. So we need to ensure that we are aware of it, aware of the risk, and if need be, there are additional measures that we need to implement to ensure that this technology is really performing what it is intended to perform.
Right. So on this particular point, I'm actually going to let Shalini have the last word, because she is from a technology company. So Shalini, do you agree with what the co-panelists have said? They all gave
Yeah.
examples, and do you think there's something that is being missed out? Is there something that you're seeing, with your other client base that you think you'd like to bring forth?
I think, as all my esteemed panelists pointed out here, technology becomes definitely a partner in the compliance journey. It's not like it's to enhance what you're doing currently. It helps you to aid at the right juncture. But I would also bring out the point brought out by Ronel, right? Like, where we are seeing that when we are adapting technology throughout the AML landscape, right from onboarding journey to the transaction monitoring to even the filing of STR, where the reports can be automated, the testing forms a critical aspect of it to ensure the quality is maintained throughout. So, as a technology company, we do offer, like, we do have a lot of technology or automation related solution to at the right critical junctures where the automation should be applied, or where the technology should be applied, and at the same time ensuring having a proper control or a testing measures around these areas to ensure that the quality is not compromised. Technology is a partner and it has to be used wisely.
All right. Okay. Before we move to the last question that I have for the panel, let's run the third poll question again. Can we have the third poll, please? All right. So, what would be the primary consideration for finalizing and implementing external AML platforms and solutions? This is the next poll question. Can you have four options in that? So, as expected, I think capability stands out on top, followed by maybe meeting new regulatory requirements, of course, at the right cost. Okay, while we are waiting for the poll to finish, there's a question in the Q&A box. So maybe Shalini, I will request you to answer that. This one is on screening and best practices by Jovita de la Cruz. So, what best practices do you think can be implemented to enhance customer screening and due diligence in response to, regulatory expectations that are present? Would you like to take that question?
Sure. Sure. In terms of, I think uh, the critical challenge faced, I would say, in the screening world is again probably a lot of false positives out there, and unavailability sometimes of the correct information, right? So your screening systems basically to ensure that your as a part of your onboarding and periodic screening should ensure it gives you the relevant hits pertaining to it. It's able to capture all the metrics. So we have typically seen that sometimes when a name matching happens, the efficiency of the algorithm is very critical here to ensure that the relevant hits are given. So we find that in the industry or in general in Philippines market, there is sometimes always a challenge to ensure that in the name matching algorithm, the right hit is obtained. In the screening program, we have to ensure that right algorithm and right settings are chosen to ensure that the false positives are kept minimal. And at the same time, again, when it comes to the PEP screening in terms of the enhanced due diligence measures, also the complete information matching is required to ensure there again we identify the right PEP information. The granularity of the list that gets maintained is also very critical to ensure that your screening is compliant to all the regulatory requirements and it's able to cater to all the regulatory list. So we do find that these are the critical measures that is required for a very good or a robust screening program, I would say.
Thanks, Shalini, for answering that question. Okay, we have exactly 10 minutes left for the webinar to end. So let me ask the final question to all the panelists. And this is, we're about to move into the new year, into 2025. So I think it's a good time to talk about, what are the trends we are seeing coming up in the next year. So, my question to all panelists is, what is the emerging trend that you foresee, which is going to influence, the future of AML CTF compliance, especially in the Philippines? And how do you think you, as well as your colleagues in the compliance profession, in other covered persons, how should they prepare? And what do you think will be the critical success factors for that? So this is open. Whoever would like to take it first.
Okay, if I may, Shirish. Emerging trends in AML CTPF compliance include regulatory, as mentioned, regulatory enhancement aligned with international standards. The second is the increased use of technology like artificial intelligence for our transaction monitoring. Another thing is greater collaboration among financial institutions and government agencies, and also the focus on the beneficial ownership transparency and the risk associated with digital asset will also shape the landscape. And given these emerging trends no, on AML CTPF, for covered person, we really have to invest in advanced monitoring technologies. We have to regularly update our compliance programs and to really enhance our customer due diligence processes and also to foster ongoing employee training. And this could only be achieved. No, some critical factors would include strong leadership commitment, particularly the senior management and the board. No, the conduct of robust risk assessments and an integrated compliance framework would probably be part of success factors for an effective compliance.
Thanks, Milagrose.
Yeah.
Who would like to comment on this?
Yeah. So if I can, I think Milagrose is like really got it right, I would say. An effective uh, what I would say is the focus or the emerging trend or how the future of the AML CFT program is going to focus on mainly the effectiveness and the efficiency. Effectiveness ensuring the control of the entire AML CFT program is proper, robust. You have a proper risk assessment conducted, and the AML CFT is a program that is there for your covered person is adopted based on your risk appetite. And then you have an efficiency metrics and the effectiveness metric enhanced, as we talked about earlier in this panel, with proper use of technology and proper use of analytics throughout the AML CFT program, right from your screening journey to the transaction monitoring to the final STR filing. And finally, the partnership angle, which is very essential for the entire industry to survive, because there are a lot of information which is available and it has to be shared. And there are channels which have been introduced to share these information, proper channels encouraged by regulator to share these information, which is going to be definitely playing a crucial role to have an effective the success of the program.
Right. Ryan, your thoughts on what's coming up in 2025?
Yeah, thank you, Stace. I believe for the moving forward, no, when it comes to addressing the AML CFTPF in compliance with the Philippine regime, um, there's this one senator that mentioned in one of his talks wherein um, if there's no regulation in place, why stop the companies in innovating? So in addressing this, we have to collaborate also with the regulators in order to come up with a better and a best it may not be the best, but of course in addressing the issues. So regulations wise, it should also align with the current trends and current threats at the moment. So, hand in hand, it should join forces between the regulators and the banking industry or all the financial institutions to come up with a better solutions, and also in collaboration with the systems providers, because factual says there are so many systems provider nowadays. They offer different salient features. I'll give some based on the experience from different banks that I usually work. They offer different salient features of the system when it comes, especially let's give like for example for loans. They give these credit solutions with different salient features, but the end product of the banks or the financial institution is of course the collection aspect. But in essence, this is not part of somehow the features of most of the providers. When you ask on why it became there is a uh, high percentage of non-performing loans, they kept silent because it's not actually part of the features of the systems that they have provided us. So maybe it's a also on the, to be fair, on the financial institutions, in order for them to uh, to use your system, definitely it also handed in from end to end. No? So of course, with the trends right now of using the artificial intelligence and data analytics, that's the current trend at the moment. Maybe in more than years right now, that will be the and of course we have to prepare as well on the negative impact of the usage of the artificial intelligence if it's not being used um, properly. So that's my take on this one. Thank you,
Right.
Shrey.
Thanks. Thanks, Ryan. All right. So we have 2 minutes left for the webinar. So maybe Darius and Ronel, in a minute or so each, what's your outlook for
Yeah,
2025?
yeah, just a few things. I think for the casino industry, I think it has to go back to the basic of increased transparency, of knowing your customers, of tracing the transactions and studying the trends of these transactions. And we have already started that with this regulation on requiring the reporting of financial transactions by the operators and their players. So we don't have that before, and now our government regulator had stood up against in favor of that, and have already required us on a daily basis for the reporting of these type of reports. And these covered a lot of things that we have to do. Of course, automation will follow. Rigorous trainings for our operators and our players have to be in place as well. Automating the system for these types of report will also have to follow. So basically, we go back to basics in 2025 when we say it's KYC. There should be no covering up or something, but just knowing really the source of funds, the source of wealth of these patrons that we deal with.
Thanks, Dharaj. Ronald?
Yeah. So I just want to note that the Philippines is currently conducting the national risk assessment, and definitely based on the results of this national risk assessment, there will be new priority areas that the regulators would let the private sector to focus. So, but I don't see that it will really move away with the current priorities that we have right now: targeted financial sanctions, use of technology, risk-based supervision of the NFPPs. But at the end of the day, I agree with Ryan regarding the dialogue with the regulators. It's really the one of the most critical factor is really to have a dialogue with the regulators. With all things moving quickly and evolving, we really need to strike a balance between, well, to ensure that compliance does not stifle business, and at the same time, business adheres to compliance. So, and this can only be done through a regular and healthy dialogue with the regulators.
Fantastic. All right. So I think, thanks to all the panelists. Thank you so much for taking time out, spending this hour, sharing your thoughts, sharing your expertise and your experience with all, our participants. Thanks to Solytics partners for sponsoring this webinar. And, I think this is going to be possibly our last webinar for the Philippines specifically. We do have others coming up for the entire region. So, I'd like to take this opportunity to wish everyone a very good holiday season and Merry Christmas in advance. And I will see all of you in 2025. So thanks again, and I wish you a good day.
Thank you, everyone.
Thank you.
Thank you, everyone.